back to South Beach. Dan Leach here with my man Tony Rodriguez, the head of fixed income strategy for Nuveen, Future Proof Miami 2025. We're on the beach. Can't have a bad day on the beach, can you?
This is the most amazing environment I've ever seen for a conference.
I completely agree with you because I've been to many of them. Not any on the beach where I can go swim 10 minutes or 10 feet away from the ocean.
Exactly. People talk about in the markets, you're swimming with the sharks, you literally can.
The physical embodiment of that. Let's, for the people that aren't aware, let's talk about Nuveen and what you guys are all about.
So Nuveen's over a $1 trillion asset manager, enormous in all asset classes from public markets to private markets. I'm concentrating in fixed income area where we have over $500 billion there. And we run the landscape from the municipal market where we're a dominant player there, to private credit markets, to public markets where we cut across everything high quality, liquid strategies, to kind of more aggressive, lower quality, higher yielding, higher returning asset classes, high yield leverage loans, CLOs, emerging markets, those areas.
And obviously, we're in very interesting times right now. There's obviously tariffs coming out, coming off. There's volatility. With the private market interest growing, will asset classes like private credit and real estate play a bigger role in people's portfolios for what you're seeing right now?
We do think that's the case. Number one, you're seeing such incredible volatility, intense volatility, and the public markets are obviously more susceptible to that than the private markets. In addition to that, the private markets have become much more accessible for all kinds of clients, from large institutions to smaller retail clients as well. And there you get benefits of diversification from it, more attractive returns from it. So as long as you know how to stick that in terms of your broader asset allocation with where your public market exposures are, then private real estate, private credit, private equity, all those areas of the market we think are valuable additions to help investors achieve their long-term goals.
Like private real estate, it's never a problem, never a bad thing to get involved with. But all right, to further the point of the volatility, I think this is interesting because fixed income yields are really high, and obviously real estate's rebounding. Which asset classes to you look the most attractive in 2025?
Yeah, so we, again, think that, to me, if you look at the equity markets, pretty high valuations, going to have maybe a little bit of a slowdown here in the economy. So we're probably not going to see 20% market returns again like we had the last 2 years. And now with fixed income yields being up anywhere from, call it mid-single digits to high single digits, depending on what segment of the market you're in, you can get equity-like returns out of fixed income. So in fixed income, some of the attractive areas that we like right now, high-yield munis are very attractive, high credit quality, solid, particularly the higher net worth individuals with very high after-tax returns. And when you move to the private markets, private credit still, of course, offers very attractive returns. We're talking about somewhere in the high single digits. For what are still, there's pretty conservative underwriting standards in terms of the areas that we participate in. When you go to public markets, then we're looking more at some of the higher yielding strategies that may be a little less well known by clients. So think about like CLO strategies. That's a very attractive segment market, which grown tremendously, and now you are able to access it as a retail investor relatively in a relatively straightforward band.
The incredible amount of money you guys have under asset management. And I think obviously it just shows the incredible trust that clients can have with you, but also that you guys are finding the right ways to get through these tough times. When you look at, just the overall way that you guys are handling it, there's obviously thousands of hours going into the right decisions. I want to just make sure that people understand that's why it's so important to trust companies like you.
Yeah, the bottom line to us in markets like this, when all asset classes are relatively highly valued, so we think security selection is going to differentiate the choice. Then the key to that was research. So lots of firms have, traders, portfolio managers, which we have, but the depth of our research staff has really allowed us to dig in and find the better opportunities, avoid the risky ones. And when you're talking about kind of higher return segments of the market, that's where that research, whether it's in municipals, taxables, or in the equity markets, that's where that company by company, country by country research is actually going to protect the portfolio the most, and then drive, because I think market beating the tries to say.
Absolutely fascinating stuff. Tony Rodriguez, head of fixed income strategy for Nuveen. Really appreciate your time. Thanks so much for the discussion.
Great to be with you.